the S&P 500 daily chart into mark looking back to November 2023. We'll zoom into this area now. Price put the periscope up above the cloud top here, nailed the channel 3 high at that level, and then closed below the top of the cloud here. And it's going to take one heck of a scrummage, using a rugby sport term, to get this ongoing supply line qualified for tomorrow. So three things could happen. It could gap up above this high, 5200.23, and then follow through and get above this ongoing demand line to qualify it. It could just gap up, straight up above the line and hold above it for end of day tomorrow on the 8th, and it will be qualified. And failing to do those two at the open tomorrow on the 8th, it could tick lower than 5170.22 and then turn around and close above this line, and it will be qualified that way. That would be the strongest indication that we're going to have some follow through after that. And that little gap up above this high and then a close above it, end of day on that line right there. That's the second best way, and I'd say a straight up gap up is the least strongest. Believe it or not, could be just an impulsive move and then come right back down again. And the other two ways, you know that it won the scrum, meaning the bulls getting the ball and running with it. If it does that and continues moving up, the conversion line will more than likely go above the falling baseline, so there could be a crossover of the conversion line above the baseline, and it will be above the cloud top here, leading span 1. Three good things could happen, and not so much the channel 3 high. It's good to see it get above that for a few days, up to 5 days. Past that, it's stretching it, get above that yellow line there. Most importantly, it's going to start bumping into the upper Stark band and the upper Bollinger band, so it could start pushing the envelope up a little bit. And I believe the odds are that we'll go higher to end this week. So we'll get above the cloud, I believe, as there's nothing but Fed speak, really. So there was already some Fed speak today. I don't know what happened there. They're probably saying, don't worry, be happy. Same thing with Kashkari, caught a little bit of him speaking. And he mentioned all three scenarios. So if unemployment ticks up a little bit, then they're going to intervene, probably get a rate cut. If the markets just run away with this thing and keep running hot, well, then they're not going to do anything. And if inflation starts heading north again, well, that could be a possible rate hike. So he gave all three scenarios. Didn't see much market reaction after his comments. And Wednesday, wholesale inventories and Fed speak galore all day long. And then Thursday, initial jobless claims and Mary Daly Fed speak. And then Friday, Fed speak galore, wedged in between consumer sentiment and the U.S. federal budget. So it's a light economic calendar, as they call it, for the rest of this week, and I think that gives traders and investors the cause to run this thing up like they have, so that they can be the ones that bought way down here And then fireworks start next week, and that's in the form of the PPI, the Producer Price Index, PPI, and then the big one the next day, CPI. So everybody wants to be positioned for that, as if those reports come in hot, then they have a little chance by the open to get rid of everything and sell at the open and either not lose too much or take a little bit of a profit as this thing heads south. Or they could come in cool, meaning those reports, and then it heads north, and then that justified their positioning for down here. So it's almost getting too late, but I believe they're still going to run this thing up a little bit more for the rest of this week.